Have you ever wondered how top crypto traders seem to always be one step ahead? The secret isn't just luck, it's data. Welcome to the world of on-chain intelligence, where platforms like DeBank, Dune, and Nansen give you the power to see where the smart money is moving in real time. Whether you're just starting out or deep into DeFi, mastering these tools can change the way you trade forever. Make sure to hit that subscribe button right now, because today we're unlocking the hidden playbook of elite crypto strategy and giving you the edge you need to trade with confidence. 1. The power of on-chain visibility. On-chain data gives you an unfiltered, real-time view into what's really happening on the blockchain. Unlike centralized platforms that report stats after the fact, on-chain analysis shows live wallet movements, token flows, and protocol usage. This is the raw truth of DeFi, visible to anyone who knows where to look. Traders use it to detect trends before they go mainstream. You can see whales entering positions, protocols gaining traction, or liquidity shifting all as it happens. It's not about guessing anymore, it's about observing. With the right tools, you can turn the blockchain into your personal trading radar. This transparency empowers smarter, faster, and more profitable decisions. 2. DeBank, the Wallet Intelligence Hub. DeBank is your all-in-one dashboard for wallet analytics and DeFi portfolio tracking. It lets you monitor your own assets, but also spy on the wallets of top-performing traders. You can search any Ethereum address and see their positions across multiple chains and protocols. You'll discover where capital is being deployed, what assets are being accumulated, and which yield farms are trending. DeBank also tracks lending, borrowing, and staking positions in real time. This is useful for identifying profitable strategies and avoiding underperforming protocols. For many, DeBank is the entry point to the on-chain data game. It's sleek, intuitive, and packed with information. Whether you're curious or competitive, DeBank puts wallet transparency at your fingertips. 3. Dune, the custom data playground. Dune Analytics is the sandbox for building and visualizing blockchain data through SQL-powered dashboards. It lets you create custom analytics, charts, and tables from raw Ethereum data. You don't need to be a developer, many community-built dashboards are ready to use. Want to track NFT sales, DEX volume, DAO votes, or liquidity pool growth? Dune can do it all. You can fork dashboards, explore contract-specific metrics, and stay ahead of ecosystem trends. The platform rewards creativity, offering endless ways to turn on-chain chaos into structured insights. 4. Nansen, follow the smart money. Nansen is like having Wall Street-level intelligence for crypto. It labels wallets based on behavior exchanges, smart traders, whales, and insiders, so you know who's buying or selling what and when. Nansen's dashboards show token movements, DEX trades, and yield farming flows with a light-level clarity. It also offers alerts on whale activity, new token listings, and emerging trends. If a top wallet enters a position, you can act on it in real time. The platform is a goldmine for identifying alpha before it hits crypto Twitter. Nansen's power lies in its wallet labeling and behavioral tagging, which removes the guesswork from on-chain analysis. 5. Identifying whale activity. Whales are the power players of crypto, and their moves can shift entire markets. On-chain data lets you monitor these influential wallets in real time. When a whale accumulates a token, it often signals confidence and momentum. Conversely, a sudden exit can mean trouble ahead. Tools like Nansen and DeBank help you track these movements as they happen. You can set alerts, review trade histories, and analyze strategies used by top-performing addresses. By understanding whale behavior, you can enter positions early or exit before the crowd panics. On-chain transparency gives you access to what was once insider information. 6. DeFi protocol monitoring. The health of DeFi protocols directly impacts the performance of tokens and yields. On-chain data lets you track protocol metrics like total value locked, TVL, active users, inflows, and smart contract interactions. These indicators reveal how popular and trusted a platform really is. When TVL spikes or user activity increases, it often precedes a price rally, Conversely, declining numbers may signal risk. With Dune dashboards or DeBank's protocol overview, you can analyze metrics across lending platforms, DX, and yield farms. This helps you spot rising stars and avoid potential failures. It's no longer enough to read a white paper or believe in hype. Real traders verify protocol strength through on-chain performance. 7. Token flow tracking. Understanding how tokens move across wallets, exchanges, and protocols is crucial for anticipating price movements. On-chain data helps you track token flows in and out of liquidity pools, centralized exchanges, and major wallets. If a token sees large outflows from an exchange, it might suggest accumulation or a supply squeeze. Inflows, on the other hand, may precede a sell-off. Nansen's token tracking tools provide clear insights into these patterns. By analyzing token movements, you can detect accumulation zones, potential pumps, or coordinated dumps. These flow dynamics offer a level of market awareness that traditional charts can't. Token flow tracking turns raw blockchain activity into tradable signals. 8. Catching trends early. The earlier you spot a trend, the more profit you can capture. On-chain data gives you front-row access to narrative shifts, project momentum, and user adoption. Whether it's a new DEX gaining volume, a meme coin gaining holders, or a staking protocol booming in deposits, on-chain metrics show it first. Dune dashboards and social tracking via Nansen can highlight rising stars before they hit mainstream headlines. Look for sudden wallet activity, new contract interactions, and shifts in capital allocation. This is your alpha zone where gains are made before the crowd rushes in. Catching trends early requires curiosity, vigilance, and the right tools. 9. Red flags and exit signals. On-chain data isn't just about entry points, it helps you spot danger. Sudden drops in TVL, whale exits, paused smart contracts, or spiking outflows to exchanges are often red flags. These signs can warn of impending rug pulls, protocol failures, or market corrections. Platforms like DeBank show contract changes and capital outflows in real time. Nansen alerts can highlight when smart wallets are dumping a token. This kind of early warning system is priceless in a volatile market. Reacting before the crowd can save you thousands or even your whole portfolio. Exit strategies should be based on objective signals, not emotions. On-chain data makes that possible. 10. Building a data-driven strategy. Successful traders treat data as their compass, not just decoration. By integrating platforms like DeBank, Dune, and Nansen into your daily routine, you build a structured, repeatable edge. Create a system to monitor specific wallets, protocols, and token flows. Set alerts for unusual activity and regularly review trend dashboards. Use Dune to test theories and validate trades with historical data. Combine qualitative research with quantitative insights for balanced decision-making. Over time, this approach sharpens your instincts and removes emotional bias. You're not just reacting, you're anticipating. A data-driven trader is one who survives volatility and thrives in chaos. Trading in crypto doesn't have to be a guessing game, not when you've got the blockchain speaking to you directly. Platforms like DeBank, Dune, and Nansen are the secret weapons of serious traders who want an edge built on truth, not tweets. By mastering these tools, you can decode the market's real-time signals, follow smart money, and protect yourself with foresight instead of regret. If you're ready to step into the future of data-driven trading, make sure you hit that subscribe button right now. There's a lot more alpha where that came from.